Hello investors. Welcome back to ETF Bazaar. Today we'll break down a very important concept, expense ratio in ETFs. We'll see what it is, how it's calculated, and exactly when it's deducted from your investment. What is expense ratio? Every ETF has a team behind it, fund managers, analysts, administration, custodians, marketing, compliance, etc. Running the fund costs money. The expense ratio is the annual fee charged by the fund house to manage your investment. It is expressed as a percentage of the fund's total assets. For example, if an ETF has an expense ratio of 0.20%, it means 20 rupees is charged every year for every 10,000 rupees invested. How is expense ratio calculated? Look at the formula. Expense ratio is equal to total fund expenses divided by total fund assets. Multiply by 100. For example, if total fund expenses in a year, 5 crore rupees, and if total assets managed, 2,500 crore rupees. So we get 0.20%. This percentage is disclosed in the ETF fact sheet and remains annualized, meaning the charge is spread over the year. When is it deducted? The expense ratio is not deducted as a separate charge from your bank account. Instead, it's automatically adjusted in the ETF's net asset value, NAV, daily. So, every day a tiny portion of the annual expense is deducted from the fund before declaring the NAV. Example, if the annual expense ratio is 0.20%, then the daily deduction is 0.00055% per day. This is so small that you won't notice it daily. But over the year it matches the annual rate. Why is expense ratio important? Lower is better, or a lower expense ratio means you keep more of your returns. Direct impact on returns, or if your ETF returns 10% in a year and expense ratio is 0.5%, your net return is 9.5%. Passively managed ETFs usually have lower expense ratios compared to actively managed funds. For example, ETF A, 0.10% expense ratio. ETF B, 0.80% expense ratio. Over 20 years, even with same returns, ETF A could give you lakhs more due to compounding. In short, the expense ratio is a small fee for managing your money, but over long term it can make a big difference in your wealth building. Always check it before investing in any ETF. If you found this video helpful, hit like, subscribe to ETF Bazaar, and click the bell icon for more investing insights.